So very good to see you here in London. The first question is the obvious one. How's business?
Business is going fairly well. The markets are holding up in good form. The asset values have come down a bit, but we're fairly optimistic for this year.
How would you assess the last quarter and this quarter?
I think this quarter has held up better than the analysts expected to hold up. The Vs through the end of February are close to $50,000 a day, maybe a little bit more or less. I think a lot of the analysts projected Vs for the entire year around 30,000, some as low as 20. So I think given the first couple of months are well above that, I think we're off to a good start. Quite a few ships have been delivered already, and they always trade at a discount, so the markets are holding up fairly well. The cargoes out of OPEC have also held up. They haven't been reduced as much as expected, so things look good right now anyway. But there are a lot of ships to come this year, so we're a little bit apprehensive about the second half of the year, the second quarter, actually.
And in fact, on the subject of ships and deliveries, there was considerable discussion around Korea and capacity.
I spent some time in Korea last year, and as Patty said at the panel, capacity is down about 30%. I think the temptation, for me anyway, is to assume that capacity down 30% pertains across all sectors. I think the danger is that that reduction in capacity could be for overall capacity, and the remaining production capacity could be focused in just one or two areas. And if you look across the spectrum, offshore still has no legs under it. Dry obviously doesn't. Containers are worse. So my own concern would be that all of the remaining capacity focuses on one industry, being the tanker industry.
Would you agree with the sentiments expressed around institutional investors and private equity?
Generally, yes. Most of the private equity investors have had trouble. Most of the institutional investors in general have had trouble. So there is not, as they say, a lot of money out there. If you look at the order book or the recent orders the past year, it's all one or two ships being ordered. It's not 5 option 5, which generally comes from money outside the industry. It's small orders by owners replacing their fleets optimistically. In the bank market, the banks just aren't there for big new building fleets. I haven't heard any banks or any owners speak of new building programs in the past year. So I would agree with what the panel said.
What about what the panel said around the secondary market?
I think what they said is the values have fallen 25%. Well, I think the underlying issue is there's a compression in the debt structure for all the owners. So to achieve the same return on equity with less leverage, the asset prices have to go down. And you couple that with the fact that the projection is that more ships are coming out and the asset values have fallen. And that's logical, because the expected return on equity is compressed by revenues coming down and also less debt in the capital structure.
We find ourselves at the beginning of a new year, obviously Chinese New Year in the offing. What do you think will be the biggest decision you make in 2017 for the business, and why?
I think for us, we're happy with our existing fleet. We have very good leverage. We have no intention of selling. So I think the biggest decision for us is, do we use more equity to buy more ships? New equity. That's the single biggest decision.
Now that is quite a telling comment. You have no intention of selling, because for a time there, it's my understanding that the fleet, or at least part of it, was up for sale.
Yes, it was up for sale. It was about 18 months ago. The asset values are quite a bit higher, and we put most of the fleet up for sale in September of 2015 in the anticipation we could sell it through the winter. And what happened is the winter was very good as we expected, but as we did not expect, the asset values fell very quickly. So there was no time to sell the vessels in that market.
And final question. If 2016, on a scale of 0 to 10, was a 6, with 10 being an outstanding year, how would you assess prospects for 2017?
I'm always optimistic, so I have to say I'm going to go with a 7.
Thank you very much indeed.